most of the tax cuts are geared around giving people more money to spend. So the way tax cuts are supposed to actually grow the economy is not by stimulating spending and consumption, but savings and investment. But cutting taxes for retirees and waiters and waitresses, bartenders, whoever works on tips. I mean, most people that earn tips, they're struggling right now. So they'll just use the extra money, to pay their bills. That doesn't grow the economy. What grows the economy is more investment, more savings, investment. We're not going to get that much of that. The marginal tax rates, even though they come down, they're not coming down dramatically. But you also have to look at the impact of the larger deficits on restraining economic growth. Because when the government borrows money, all of that money is at the expense of investment, because the government has to tap into the pool of savings that might otherwise finance real economic growth. So when the government cuts taxes and borrows money, almost all the tax cuts go to fueling spending, and all the deficits take away from investment and economic growth. So it's not true that you could just slash taxes and have economic growth if at the same time you have larger deficits. The way to have economic growth from tax cuts is to also cut government spending, so you don't negate the benefit of the lower taxes with higher deficits. And I think the bigger deficits actually are a bigger drag on the economy than the tax cuts or stimulus. So what will actually happen if we get these tax cuts? We will get bigger deficits, but we will also get bigger trade deficits, because people are just going to take their paychecks, because they have more money now because they're paying less taxes, and they're going to buy more imported products because that's what we got to buy, right? Because we're not making the products, they're being made abroad. It's not going to work. The nominal numbers could go up, but we've been having this fake economic growth ever since the 1990s with Alan Greenspan, because all we do is get higher numbers. Like the Dow Jones, and it's a little bit better now, but the Dow Jones so far since 2021 is up a little over fourfold, and gold is up eightfold. So what does that tell you is actually happening? The market was going down. The GDP, if you measure it in gold, real money, has been collapsing. But if you measure it in fake money, in dollars, the GDP is going up. All the pundits, especially the Democrats, they can't understand why Harris didn't win, because the economy is so great. Just look at the government numbers, and that proves it. Look at our strong GDP, look at our low unemployment. All these numbers are a function of, inflation masquerading as growth. The real economy is weak. It's been weak for a long time. That's why people are struggling. That's why they have no savings. That's why people are working 2 or 3 jobs just to pay the bills, despite the fact that they tell us that the GDP is up and the economy is getting better. So yes, we can get more fake economic growth, but at the end of Trump's term, and all the problems he was elected to solve will just be worse. And now we're going to have to elect a Democrat, because now we need change, right? We keep going Democrat, Republican, Democrat, because you always want to throw the bums out, because the problems keep getting worse, because nobody wants to actually solve them, because solving them requires some short-term pain. Trump didn't promise any short-term pain. He said, you elect me and it will boom immediately. It'll be a huge economic boom and you're all going to be rich. That was what he was selling to the voters. Again, everything is risk on, right? Gold is risk off. So people think the U.S. economy is going to boom. The stock market's going to boom. Why do I want to own a safe haven like gold when I can make a fortune in the stock market in this booming economy? They also think that the strong economy is going to mitigate the rate cuts. So we won't get as many rate cuts as the market might have thought. So they think that higher interest rates are negative for gold. Also supporting the dollar. We've had a big rally in the dollar since Trump won. And so that is weighing heavily on gold. Also, we've had some comments, and speculation that the BRIC nations and other nations that were moving away from the dollar are now going to embrace it because they don't want to piss off Trump because he's threatening all these tariffs. And so maybe because now we got a new sheriff in town, that the move out of the dollar is going to slow, and that the central bank buying of gold, because if central banks try to be more friendly to the dollar to appease Trump, and hey, we're not selling our dollars, right? Don't tariff us. Look, we're your buddies. If they're going to stop selling their dollars, they don't have to buy as much gold. So there's a lot of reasons that people are thinking, hey, this is going to be bad for gold. Now, look, gold went up by about 40% during Trump's first term, about 10% a year. And so it wasn't like, gold didn't do well when Trump was president. But I think it's actually going to do a lot better, despite what the markets are saying right now. I think the markets are wrong again on this. I think a Trump presidency is very inflationary, but that's not bad for gold because the Fed is not going to fight the inflation. In fact, if it tries, Trump administration is going to beat up the Fed pretty bad and then put a lackey in there when Powell's term is over if Powell doesn't cooperate, because Trump wants low interest rates. If you remember, when he was president the first time, he was very critical of Powell for raising rates. He demanded lower rates. He wanted rate cuts. He wanted negative interest rates. He was upset that Europe had negative interest rates and we didn't. He wanted more quantitative easing. And the only way to finance these tax cuts without skyrocketing long-term interest rates is to go back to quantitative easing. So I think that this is going to be an inflationary 4 years. And I think the short-term impact of the tariffs, of kicking out the illegal immigrants and the tax cuts is going to accelerate an inflation that was already on the rise. So I think the dollar's rise is going to be short-lived, just like gold's decline. Now, by short-lived, could it go on for weeks? Could it go on for months? Sure. I don't know. I don't have a crystal ball as to when the markets are going to turn. Now, Bitcoin is rising, and it's interesting because with everything that I'm describing, you would assume Bitcoin would be going down, right? Because Bitcoin was sold to people as, hey, this is a safe haven asset because the US dollar's in trouble. We have big deficits. We're going to have a lot of inflation. They're going to print a lot of money and buy Bitcoin because it's a better store of value than gold. It's digital gold. Well, actual gold is tanking. So why isn't digital gold tanking? Because Bitcoin isn't digital gold. It's really anti-gold. Bitcoin is a risk-on asset. But the reason it's rising now is because everybody expects the Trump administration to basically do all these great things to get people to buy Bitcoin, such as eliminate all the capital gains taxes on Bitcoin. Hey, you can make a lot of money on Bitcoin. It's all tax-free. And they're thinking that they're going to start a U.S. Bitcoin reserve and they're going to go into the market and print even more money, create even more inflation to actually buy Bitcoin. Like the last thing we need is the U.S. government to go into deeper debt to buy nothing, to buy worthless tokens. But that's great for the people who own those worthless tokens because they can sell them to the U.S. government, who doesn't give a damn how much money they lose buying these things because it's not their money. And what they'd be doing is they're rewarding people who voted for them. You know, Trump, when he was president the first time, said Bitcoin was a scam. He said it was a fraud, said it wasn't currency. It was a threat to the dollar, to the U.S. financial system. He couldn't have said more negative things about Bitcoin. Why did he change his mind? Did he really have this epiphany? No, he changed his mind for the same reason a lot of other people have done a 180. It was the money that corrupted him. So he wanted to run for president. And these Bitcoin guys are like, hey, you promote Bitcoin and we will write you huge checks. We will be your biggest donors if you just come out and support Bitcoin. And what Trump needed, young voters, because the Republicans don't do as well in the young demographic because usually you need more life experience to be a Republican, right? There's an old saying, you know, if you're not a Democrat by the time you're 21, you don't have a heart. If you're not a Republican by the time you're 28, you don't have a head, right? So younger people, they're naive, they're idealistic, they believe all this BS by the Democrats. But there's a lot of young people who own Bitcoin, and Donald Trump promised to make them rich. Vote for me and I will buy your Bitcoin and you'll be a millionaire. I mean, I've said that before. I mean, the price can go up as long as people are dumb enough to buy it. Now, obviously, the people who bought it, if they sell it and get out, they look pretty smart. But the thing is, most people don't sell their Bitcoin. That's the whole idea. Buy it and never sell it. That's why it keeps going up. But eventually, they're going to want to sell it. They're going to want to buy a new car. They're going to want to buy a house or want to take a vacation. I mean, you eventually got to sell. But the other thing that's driving up the price of Bitcoin is you got that madman, Michael Saylor, who says, I'm going to buy $42 billion worth of Bitcoin. So people want to front run that. People want to buy Bitcoin to sell it to MicroStrategy. If the dollar keeps rising, that is negative for emerging markets. It's because I don't believe the dollar is going to keep rising. I also think that tariffs, people are afraid that the tariffs are going to hurt emerging markets. The tariffs are going to hurt us. Tariffs hurt the most the nation that imposes them. That's always the case. Now, some foreign companies will be hurt by our tariffs because they'll have to sell their products to somebody else for less money than they would have got selling them to us. But those foreign consumers are going to catch a break. A lot of people outside the United States are going to get the benefit of our tariffs because they're going to buy goods at lower prices that otherwise would have been sold to Americans, but we're not buying them because the tariffs made them too expensive. But also, I think that if the tariffs are really high, right, a lot of these emerging market countries are going to just develop better trade relationships with themselves as they buy and sell goods to each other instead of the United States. That means there's less demand for dollars, and ultimately the tariffs backfire and the dollar weakens, and the weaker dollar is good for the emerging markets. And again, to the extent that foreigners don't sell us as much stuff because of the tariffs, they're not going to buy as many treasuries, because that's how we pay for our imports with our debt. We have a $1 trillion plus trade deficit. And if foreigners aren't selling us stuff, they're not earning dollars. And if they're not earning dollars, they don't need treasuries or US dollar denominated debt. And so I think the rest of the world is going to be a lot better off if they buy less of our debt and loan us less money. And instead, they keep their products. So a lot of the products that are now being produced in factories in emerging markets are going to stay in those emerging markets. And the people that live there are going to get to buy those products. What Americans are going to have is our money. So we're going to print more money and we're going to have that, but we're not going to have all these products that we used to have, because they're going to be, outside the United States. So my story on the emerging markets is still intact. I still think they're going to do really well. It's just that, again, you have another delusion in the market. Speculators are piling into dollars, betting on a reality that's not going to exist. And so while that's happening, that does work to undermine those investments in the short run. And so I just think it creates a good buying opportunity for people. I mean, right now you got a great opportunity to sell the Trump trade and fade it and buy the stuff that's going down and sell the stuff that's going up. Oftentimes, but on a smaller time frame, markets will do one thing as a knee-jerk reaction, and then they'll do the other as the real reaction. And so this could be a knee-jerk reaction that spans many days or many weeks or maybe even many months. But I think when we look back at it, we're going to find that the people that bought into this made a mistake. People crowded into the wrong trade, because what everybody is assuming is going to happen is not going to happen. And therefore, the positive things about the assets that people are buying are not going to happen. And a lot of the negative things about the assets that they're selling are not going to happen. It's clear that the reason that Trump would want to fire Powell is because he's not cutting rates fast enough, because he's not doing quantitative easing. So that should be bearish for the dollar. That should be bullish for gold. If Trump really wants to get rid of Powell and replace him with somebody who will just be his yes man, because when he ran for office initially, he criticized Janet Yellen for being political, for keeping rates artificially low to help Obama. But then he criticized Powell for not doing the same thing for him. And now he wants the Fed chairman to do the same thing for him. It's funny. There are people now saying, hey, yeah, the government should take over the Fed. Oh, the Fed is unconstitutional, which it may be, but not for the reasons they think. But they think the U.S. government should, be in charge of printing money and interest rates. That would even be more unconstitutional than what we have now. But people don't understand. The U.S. government has no constitutional authority to print money. The framers called that emitting bills of credit. They don't have the power to do that. They can only coin money. And what coining money means is taking gold and silver and making a coin out of it. Emitting bills of credit, they can't do. Now, the states are also prohibited from emitting bills of credit, and they're prohibited from coining money. The only thing the federal government can do in the Constitution is coin money. If it doesn't give them the power to emit bills of credit, they can't do it. And in fact, the first couple of versions of the Constitution, it was in there. They took it out. They didn't want the federal government printing money. And the federal government also doesn't have the power to make anything legal tender. Only the states can declare legal tender, and they're limited to gold and silver. That's it. But the way they got around the Constitution is they set up the Fed as an independent banking syndicate. And so the Fed was issuing bills of credit, not the government, because the Fed is not part of the government. It's totally separate. And the initial Federal Reserve notes, they were redeemable in real money, which was gold and silver coins that were coined by the government. But they were notes promising to pay dollars that were made out of gold and silver. And so that's how they justified the constitutionality. But if they try to have the government do what the Fed does, it's totally unconstitutional, because there's nothing in the Constitution that authorizes the government to do what the Fed does.